Hi, everyone.
Hello.
Hi, is this Tanya?
It is.
Hey, Tanya, how are you?
I'm doing well, dear. How are you?
Good, good. 1 second. Hi, Asana, how are you? And Asana, if you can hear us, you can talk or you can feel free to use the chat box. But I'm just asking everyone to tell me their business so I can keep that in mind for today's presentation or business idea. I know there might be a few people that are thinking about starting a business, which is awesome. All right, I'm going to go ahead and get started for today. And all right, awesome, awesome, awesome. So I'm so excited to have you guys here today. I'm excited that you decided to invest in yourself and this next hour with me. If you need me throughout today, please do feel free to use the chat box. Today's webinar is recorded for playback, so I am minimizing conversation and video for the recorded portion. However, I will turn off the recorder when we get to the question segment so that I can connect with you guys, and I'll turn on my camera so that you guys can see me. So super excited to have you here. The reason I am doing this, hold on, let's see, clear others drawings. Let me just take that off. Okay. So the reason why I am doing tonight's webinar is really to go into a little deeper the importance of understanding your business budget. And I think a lot of times when we talk about starting a business, we don't ever really get to hone in on understanding the cost to be the boss. And I think for me, what I understood going into full-time entrepreneurship and having a few employees now is that it really is a bit challenging to not only make sure that your payroll is covered, but to cover others if you wish to expand outside of just you as a business. And so tonight we're going to go through some of those expenses and what they may look like. And I'm really curious for your questions and feedbacks towards the end. I put the home alone face because this is how I felt when I first started business, and I also started understanding like, oh, this is real. And for me, before I went into full-time entrepreneurship this February, uh, for me, it really was, let me just give me 1 second. It really was, okay. It really was a challenge understanding that if I want to move into full-time entrepreneurship, I have to be able to cover my existing bills, and I also have to be able to cover my bills in the business. And if I was to have someone else alongside as an assistant or an employee or a contractor, I also need to really be able to see a financial plan for them. So I'm excited about going through this tonight. Now, I'm going to ask you guys to participate via chat. I like to keep things lively. Please don't fall asleep. This is super important information. So let's talk about this. Please, everyone type one myth that they've heard about starting a business. Oh, and if you didn't grab a paper and pen, this would be the time. Go ahead and type in what you've heard. Losing money. What else? What else have you guys heard? Thank you, Sharice. Not meeting all the bills for the month. So you heard that sometimes it could be hard to meet the bills. Okay, what else? You have to quit your job. No, okay. Tanya, that's good. What else? Anybody else before we move on? I'm going to go through some myths. You need to put your business first and quit your day job. And you know, guys, I'm really afraid. I think I talked to Tanya about this before. When people get momentum, the first thing they think they have to do is quit. And I'm here to tell you that's not always a good plan. So here's some myths. If I have debt, I cannot invest in myself and have a business. A lot of small businesses fail, and so my business will fail. If I own my own business, I can avoid paying taxes each paycheck. So some people think they don't have to pay taxes. And I need money to make money in my business. And I am living proof that I started a business with $150. And that was because I wanted to actually have an LLC and an EIN number. But it was some rough times, I'll say, in the beginning when I got started. And by no means was I full-time jumping into it. I had a full-time job to help supplement my dream before leaving. The reality is there's never a right time to start a business, but you got to get started. Starting a business can impact you positively and pay off your debt. That's one of the goals I'm excited about. You'll need to make smart borrowing decisions to not add to your overall debt. You will need also, to be accountable for your spending in the business. And this is important in your personal affairs. So because money is going to come to you differently, you may already know this in your business sporadically, and it may come very so often or not so often. As the money comes in, you are super responsible to make sure that you pay it out accordingly. I hope that resonates with everyone. So let's continue on. I want to make sure that we get to some ideas before we get into the crux of today's webinar. So I always talk to people about what streams can you add into. I'm going to leave time for us today to help each other do what I love to do, which is called a mind map session. I feel like whenever you're in the midst of other entrepreneurs that are new or seasoned, there may also be opportunity to add value to those people in the room. So we're going to get to that in a second. But you also want to think about what streams of capital to finance your business are there? How do you fundraise or crowdfund? You want to start small, but think big. It costs the same amount of effort. This is what Grant Cardone says, as it does to think small as it is to think big. So we're always going to think big business with our businesses. And you want to build in your plans a way to pay off debt along the way. The goal is to not accrue debt, which is very, very possible when you're starting off a business. So please, we want to be thinking about how to pay this down a bit. And again, any feedback or questions you guys have throughout today, feel free to use the chat box. So I hope you're taking notes because we're going to get into the crux. All right, everybody that's in should be in. So type of accounts. One of the things that I talk about is, understanding business accounts. Do you have a business checking account? Do you have a business savings account? Right? How will you pay yourself? So, and we'll get to question and answers, I'm sure. But if you're bringing in money via PayPal, Cash App, Square, Stripe, all those ways to bring in money with a processor, that money needs to land in one account. Okay? Business savings account. So, do you transfer your tax money over when you go to make quarterly payments? We're going to talk about that in a second. Do you transfer money just to save to get ahead for the next coming months with expenses? How do you pay yourself? Do you pay yourself with transfers from PayPal to another PayPal account? Do you write yourself a check from your business check to your personal checking account? These are all things to consider. Now, I talk about taxes here because this is important. I'm going to send this form to you guys. When you pay your quarterly estimated taxes, you're supposed to pay for the money you earn each quarter. So when you make quarterly payments on April 15th, it's from the money you estimated in repayment from January 1st to March 31st. I hope that makes sense. And the form that I'm referring to, Form 1040-ES, is here. And it talks about, what I really love about the IRS forms, the latest ones, is it goes into grave detail what that should look like and how you can estimate what those payments should look like in terms of your standard deduction, when payments are due. All right, talks about penalty. So this is something that we really need to hone in on. And I'm going to send this over to you guys to have and to use and really to figure out. So this is good. So it talks to you here. Let's just show this. So let's say you file single. And when you do your line 5, it talks about income that you earn. Let's say you earn right in here. So it helps you figure out your tax status. Are you taxed at 15 or 20% in business? So this is how you do your self-employment worksheet. I think we should have more workshops around this to understanding these worksheets and workshops. I said worksheets. To understand these worksheets during a workshop so that you can understand what your tax expectations are when you pay quarterly tax to keep you on par with the IRS. Is everyone good so far? And I don't want to lose you in the semantics of this. I'm going to send this over to you guys. And just type for me, we're good, or I'm okay, if you're doing okay so far. And remember, we will do a Q&A session at the end. Okay. So I want to get into something called fixed expenses and variable expenses. And again, I'm being mindful of time because I want to leave time to talk and do some dreaming with one another in terms of helping each other bring in some more income. I really am a big fan of that. So when it comes to fixed expenses, this is super important. Fixed expenses really are the things that are going to remain a constant, like your mortgage or your rent of where you are staying, any utility bills for your business, any phone bills for your business. If you have a customer relations management system, I know, for example, I just switched from Setmore to Acuity for my clients when they schedule, and I really am in love with Acuity, by the way. Acuity for the year was $209. That's an expense. I know that I also have, that's my scheduler, my CRM is 17 hats. And 17 hats cost me, I think, about $200 a year as well. That's another fixed expense. So I know yearly to look for those expenses. So I want you right now, I'm going to take a few minutes, if you have a pen and paper, start jotting down some of the things that you use for fixed expenses or things that you have as a fixed expense. Acuity. And Tanya, if you want to get a good look of what Acuity looks like, if you go to my link in Instagram and click my first link in my bio to schedule a discovery call, that's the new Acuity form. I think it's so clean, especially for the web. The other one, I'm going to block this out. I'll send this all to you guys in a summary. Don't worry. 17 heads. I actually have a referral code for 17 heads. I think we both get something if you use the referral code to sign up. But 17 heads is awesome. It also has an accounting system built in, a processor in terms of taking payment is built in. You can see if they viewed your invoices or your payments. Super duper in love with Acuity. All right, so let's share. So go ahead and type for me if you could in the chat box. This may help someone else. Go ahead and type just one or two of your fixed expenses. Rent, website fees, affiliate fees. Now, affiliate fees might be more of a variable expense, which I'm going to talk about in a second, because that may fluctuate unless there's a standard fee. Okay, cards, rent, phone, cell phone, yep. Okay, good. Good stuff. So let's talk about variable. So cost of supplies in your business, marketing, advertising, attending events. This is really important because I know a few of you, and I know that we like to be at events, but trust and believe if it's not free, I am budgeting my events. So printing books is a variable as well. Great, awesome. What else do we have? This is good. Printing books, yes. And your books will fluctuate most likely by the orders that you're putting in. And your orders may fluctuate by the promos and the sales that you have. That's a really good one, Tanya. This is good. Okay. Cash flow. Now, this is super, super important because we're going to talk about the cost to be the boss in a second. But cash flow is super important because you need to know how your money fluctuates over time. So what's important to understand is that you should be looking at a cash flow report for yourself at the end of each month. And you need to see what's left, what came in, what went out. Identify things that are miscellaneous, like what is this? What did I pay? What was this charge? If there's extra money over the top of your goal, what does that look like? If you have overages, let's say you have money that's left over, you may need it in the future. Should you move that over to a savings? Does that make sense? You also, when you think about cash flow, you want to think about seasons. So some businesses, depending on the season, do really well. I'm going to give you a personal story. The student loan doctor was pretty slow. Let me tell you, pretty slow come June and July. But this little ducky is surely popping come August. Why? Because people are going back to school. Why? Because people want to buy a home. You think about home buying in the fall. If you use Wave, that's good. You can use your accounting system. Some people use QuickBooks. You can use Wave. I also am old-fashioned. I look at my monthly statement that comes from my business bank account as well. Yep, that's good. You need to understand how much cash is coming in and out. And that profit doesn't always equal to cash. Now, let me tell you something that got me on fire. I realized that sometimes my sales are not immediate if I'm using the invoice system. Sometimes it takes me 2 weeks to be paid. What I've started really implementing in my service-based business, and it was tough, guys, I asked, would you like to pay for your upcoming appointment today? And that was really tricky for me to do because I think sometimes we empathize a lot with potential and even existing clients, but we cannot rely or wait to be paid. We must ask to be paid in advance, or definitely I don't do anything before service is rendered. But sometimes I realize if I'm waiting and you're not taking this as serious as I'm taking it, then my calendar could be held up. Now, Jackie, tell me again, are you, your primary service of business, is it here, Jackie? I want to make sure I'm talking to the right Jackie. Don't kill me if I'm not. What's your primary business? And we also should just share with each other in a second in any case. And then Tanya, I'm thinking about you. Credit repair. Oh, Jackie, I'm sorry. I'm confusing you with my other friend, Jackie. Yes, Jackie from Florida. Got it. Okay. No, it's on mute. It's all right. I'm going to turn it off. I'm going to turn off the recording in a second. We'll go to Q&As. Okay. Credit repair. So credit repair, Jackie, you can share with us in a second when you're off mute. You can tell us if that business fluctuates. Now, what I was saying for Tanya is, Tanya, do you find that your business fluctuates, let's say with book sales, depending on the amount of events that you have booked, could be possible too. So what I always say with authors and book sales is that you should have a monthly financial goal for your book sales. So let's say you said, Tanya, I want to sell 100 books a month, and 100 books times the cost of your books gets you to that number. And then that will really keep you accountable if you're putting that in as an estimated payment line to really hit that goal. So that's good. All right, so we're going to keep going because I want to get us off of mute in a second. All right, here's what I need you guys. We're going to share, so take your pen and paper out. I know I put math in here. Don't kill me. All right, ready? Let's go. So your business cost equation. Let's start with this. Line 1. Write down for yourselves. You don't have to share this in the chat. Just write it down. How much do you want to earn in a month? The next line is how many working days? And every month you should do this. How many working days are there in a month for you? So if there's 30 days, let's say you do take your weekends, and now you're working, let's say that's 8 days off. That's now up to 22. So how many days? And every month this will change. And because you might travel, you might have speaking engagements. How many working days will you work in a month? Now, this is what you're going to do. If you said that you wanted to earn in your business $4,000 this month, and you're working 22 business days, you're going to take 4,000 divided by 22. You should be earning about $182 a working day. Does that make sense? Type yes if you get the gist of what I just said. Okay. Now, people ask me this all the time. Well, what should I put aside? Well, once you know your tax rate could really be 15% and not 25, but I just put 25 as a high estimate. But maybe 15% and not 25 will go aside for taxes. 25% will be put aside for replenishing of inventory or marketing. So that might be 25 off of each sale. In terms of, let's say, Tanya, you sold a book for $20. 25% of that could go aside for taxes. The 25% of that, so $5 for taxes, $5 for replenishing of books, and then 10 is your profit, minus any credit card processing fees, if you're using those. Does that equation make sense? Okay. And for the purposes of this recording, before we get to question and answer, I'm going to end with this, which is my contact information for anyone that is watching the replay of the webinar. Feel free to reach out to me personally if you want to have further conversation about this. I also do this separately for businesses and business owners. If you want to sit down with your financials for an hour-and-a-half session, my service fee is only $100. And we could do it virtually in person if you want to actually build out your business budget. So I want to make sure that I put that offer out there. So guys, I want to go ahead and end the recording.